Is it stupid to invest in altcoins in 2025? It's a question that's, well, it's probably crossed your mind, hasn't it? Especially if you've been watching the crypto markets lately. That sentiment, that feeling of frustration or maybe even despair, it can be a really powerful force. Sometimes misleading, though. But what if that very emotional low point is exactly the signal we should be paying attention to, not shying away from? Today, we're doing a deep dive into an article that, well, it directly challenges this whole stupid idea. An article that kind of whispers opportunity, where, everyone else seems to be screaming panic.
Yeah, and our mission today is really to unpack that core argument, to examine the historical patterns, look at the data presented in this source material, and to understand the, let's say, the nuanced investment philosophy behind accumulating altcoins precisely when others are feeling fearful. This whole deep dive, it's designed to give you, the listener, a clear, data-driven perspective without overwhelming you with jargon, just helping you maybe see the underlying rhythm of the market.
And I mean, when we look at the current market state, like this article describes it, you see exactly what fuels that frustration,
Mhm.
right? The crypto market's been consolidating for quite a while now, basically trading sideways, maybe building up energy for a potential move. And while Ethereum is, well, it's holding its own, doing relatively okay, a lot of altcoins are still way down. We're talking like 75 to 80% down from their highs in late 2024. You can almost feel that collective sigh from investors. People who bought in hoping for a quick bull run that just hasn't happened yet.
Exactly. And what's really striking here is that this frustration, this exact feeling, it mirrors past cycles. Then back to maybe 2017 or 2020. Doubts were really peaking just before those major recoveries kicked in. It's like waiting for a bus that seems stuck forever and then boom, suddenly it arrives. This historical parallel, it isn't just a coincidence. It's actually the core of why this article argues so strongly against calling altcoin investment stupid right now. It suggests this low sentiment is, well, it's a classic sign, like a psychological reset where the market kind of needs to shake out all the weak hands before it's really ready to move up again.
Yeah, that makes sense. And this brings us to a really crucial piece of data that article points to, something called the Altcoin Season Index. This index, it runs from 0 to 100, and right now it's hovering around 25. That's pretty low.
It is very low, and the implication of that low reading is, well, it's profound, historically speaking. Low readings on this index usually happen when basically, quote, no one wants altcoins. It's kind of like finding a treasure map where the X marks the spot in the quietest, least explored part of the jungle. It implies it could be an optimal time for accumulation. On the flip side, high readings, up in the 75 plus range, those happen during market frenzies, which is precisely when it's often too late to buy cheaply because, well, everyone else is piling in.
Okay, so if the index is basically saying, hey, the party's quiet now, which means the setup for the next party might be brewing.
Right.
Let's look at some specific altcoins and their historical patterns that the article details. Take Optimism, OP, for example. The article notes it typically sees heavy drops in the first half of the year. Then rallies often follow in the second half. And right now, we're seeing a 5-month consolidation period that looks remarkably similar to its past pre-rally phases, those quiet times right before a big surge.
Yeah, and you can connect that pattern to another one, Litecoin, LTC. LTC shows a different but distinct pattern. It tends to have these big runs, but only after really long periods of consolidation. Often stuck under significant resistance levels, price points it struggles to break through. The article even throws in that tantalizing rumor of a potential Litecoin ETF, mentioning it as a possible catalyst that could trigger its next breakout, if history repeats.
Interesting. And then there's the big one, Ethereum, ETH, which often acts as a kind of bellwether for the whole altcoin market, right?
Definitely.
Its pattern is usually one of consolidating before making those sharp, really powerful rallies. The article reminds us about past chances to buy ETH between, say, $1,600 and $2,300, which, wow, seems like ancient history now, given it's currently over $3,800.
Yeah, really puts it in perspective.
Those were consolidation phases that, well, they handsomely rewarded patience, didn't they?
They absolutely did. And just to round out the examples the article gives, there's Avalanche, AVAX. AVX has this very characteristic behavior, these vertical rallies, happening in short, intense bursts, often without major pullbacks or corrections along the way. Understanding these individual patterns for different coins, it's pretty crucial if you're thinking about an accumulation strategy. Helps you maybe spot when one of those quiet periods might be ending.
Right. So we've looked at the individual players, OP, LTC, ETH, AVAX. But what's really compelling, I think, is how their movements aren't totally isolated. Like you said earlier, there's this bigger rhythm. They often seem to be dancing to a larger, maybe unseen beat of the broader market. So let's pull back a bit and look at that bigger picture the article paints.
Yes, absolutely. Key insight here is the ETH-BTC pair. You can think of it almost like the heartbeat of the altcoin market relative to Bitcoin and its recent rhythm. Well, the article points out it's strikingly similar to patterns back in 2019, which, as many of us probably remember, came right before that big 2-year crypto bull run. So if you connect this to the bigger picture, it suggests a significant shift in market dynamics could potentially be underway.
And there's an even more maybe intriguing correlation the article brings up, the one between the ETH-BTC price movement and the cycles of the Chinese Yuan. The article notes a historical link there, and apparently both are currently signaling a possible bullish phase. Now that's a connection I wouldn't have immediately thought of.
Surprising sometimes.
It really shows how interconnected global markets can be, doesn't it? Even in crypto.
It really does. And this all raises a really important question. What's the core investment philosophy that sort of underpins all this analysis? The article is quite upfront. It doesn't sugarcoat it. Altcoins are definitely risky, no doubt about it. They come with high volatility. They can have these really deep drawdowns. We've seen it. However, they also offer potentially massive upside during those rally periods. It's a classic high-risk, high-reward situation that, frankly, requires a specific mindset.
Okay, so what does this mean for the, quote, best strategy, according to this article? It sounds like it's all about accumulating during these low-interest phases, these consolidation periods we've been talking about.
Pretty much, yeah.
It means resisting that temptation, that FOMO, to chase the green candles after an altcoin has already shot up, say, 200 or 300%. Which makes sense for taking profit, sure, but what about holding? What about the argument for holding through potential pullbacks, especially if you believe in a project long term? Does the article touch on when to hold versus when to sell?
It does give an example, yeah. It provides a concrete case with a coin called Omni. The strategy discussed there was actually selling it after a strong gain, rather than trying to hold it through potential retracements or dips. This kind of illustrates the practical application of that philosophy, basically, taking profits when the market gives them to you. Instead of just hoping for endless upward movement, which rarely happens, it's about recognizing that the massive upside often comes in bursts, right? And you need a plan to actually capture some of that gain.
All right, let's try and break this down then. Let's summarize the key takeaways from our deep dive today. First, it seems altcoins are currently in an accumulation phase. We're not yet in a full-blown bull run, maybe, but the groundwork could be being laid.
Seems to be the argument, yes.
Second, Ethereum often leads the way. The rest of the altcoin market typically follows its lead, eventually.
A common pattern.
And third, maybe the most important point, patience is absolutely paramount. It's almost counterintuitive, isn't it?
It really is.
Every bone in your body might scream sell when things are low and scary. But the data, or at least the historical data presented here, says accumulate. Historically, buying when everyone else is fearful seems to have yielded the best returns over time.
And to really reinforce that, the final key takeaway, I think, is the importance of trying to be data-driven, not emotionally driven, which is easier said than done, of course.
Oh, yeah.
But it means actively working to avoid the panic selling near market bottoms. Or, just as importantly, avoiding buying euphorically way up near the peaks when everyone's excited. The data consistently suggests that those emotional decisions are often the most costly ones in investing. It's about trying to let the charts, the patterns, the data, not just your gut feeling, guide your decision.
So here's a final thought to leave you with. If the data, like the data in this article, suggests there might be opportunity hiding amidst all the fear, what signals are you actually looking for to guide your own decisions? And maybe more importantly, how much is emotion playing a part in those decisions? What if the biggest obstacle to your financial growth isn't even the market itself, but maybe your own reaction to its inevitable ups and downs? Something to chew on, perhaps, the next time the market tries to shake you out.